Hello friends, welcome to my channel. Today we will be discussing about ICICI Lombard General Insurance Company. So let's get started. Before that, there is a disclaimer. So this video is intended only for educational purposes. The facts and figures which I have mentioned in this video, they are also publicly available, and I am not liable for any quality, accuracy, completeness, timeliness of the information provided for any direct, indirect, consequential, incidental, or any kind of a damages which may arise out of use of the information which is presented in this video. Please do your own due diligence and consult your financial advisor before making any investment. These are all my personal opinions based on the facts and figures which are publicly available. I do own the stock in my personal portfolio. Please watch the video till the end so that you don't miss out on any key metric and the opinions around that. So ICICI Lombard General Insurance Company, basically the business is general insurance, which is different than non-life. So it's a non-life insurance. Basically, it's not a. They also have ICICI also have a ICICI Prudential Life, which deals with life insurance. So this is the non-life insurance company. It got listed on stock exchanges, both on Bombay Stock Exchange and National Stock Exchange in year 2017. It's not. It's quite recent listing, and it is the largest private sector non-life insurer in India, based on the gross direct premium income from in the fiscal 2020. So it is promoted by ICICI Bank, and they hold around 51.88%. This company has very high institutional holding. So mutual funds, FPIs, FIIs, they all hold this. They are having a holding in this company to the extent of 41.04%, and a small portion is held by retail investors and non-institutions, which is around 7.08%, a very low float, and not a very high ownership in terms of retail investors. And what it offers is it offers comprehensive and well diversified range of insurance products, which includes your fire insurance, motor vehicle insurance, health insurance, travel and personal accident covers, marine insurance, and all of that. It serves individuals also, large corporate houses, and also government customers, and they have a variety of distribution channels, offline and online. So let's see about some key stock facts. So the market cap of this company is around 64,277 crore. It's trading at around 1414 rupees, and the high which this stock has made is around 1626, and the low is 1125. The price to earning ratio is around 43.64, and price to book is slightly expensive, 8.65. Dividend yield is not very high. It's around 0.28% only, but ROS is good, 28.8%. Return on capital employed, return on equity is around 21.6%, and the face value of the stock is around 10 rupees. So all of these figures are as of 30th April 2021. Coming to the key strengths of this company, there are around, I can broadly say there are 5 key areas where they have definitely key strengths. So one of them is they are market leadership. They are able to maintain the market leadership position across all the segments in which they are operating, including motor insurance, health, fire, engineering, liability, and marine segments over many years now. They continuously innovate products and solutions to suit their evolving customer needs. So they have a diverse product range, and they promote them through multiple channel distribution. Okay. They also serve customers by leveraging digital technologies like artificial intelligence, AI based machine learning, analytics. They do a lot of analytics. They also do IoTs, and then they are able to reduce decision making steps in their workflows. So which means that they are able to have a very good turnaround time, and that really improves their operating efficiencies. So they have done really excellent in the terms of customer service by implementation of latest technologies. They also have very good risk management practices. They have a data driven risk selection framework, and they also invest very high investments in debt portfolio, sovereign securities, and most of these securities are AA rated, which are in bonds and debentures, which gives them a better risk management. So they have very good risk management practices also. They also they also do capital conservation. They don't spend, or they don't invest at a very aggressive pace. So they are conservative as such. And they also have a reinsurance done, quality reinsurance done, and they have practices in the risk management and capital conservation. There are many key differentiators also in this company, compared to any other non-life insurance company. So it is having a very strong brand equity. So which means that if you can see, the gross written premium is around 135.92 billion rupees, very high. They have issued over 26.2 million policies and settled 1.8 million claims, which is a really big number. So they have a very strong brand equity and operations across locations. They have very good distribution network, around 273 branches, 840 virtual offices. They have a partnership with the garages. They have a network of around 8,800 garages, and they have a network of around 6,536 hospitals tie-ups. They have a diversified product mix, like motor, health, travel, personal accident, fire, marine, and others. All of these segments, they have very comprehensive product portfolio. They are enabled by technology, so they have a very good technology differentiation, and they have digital services capabilities, which they are continuously improving in the last several years. So 95.6% of their policies are issued electronically. They have 31% cashless authorization done through implementation of artificial intelligence. They have mobile applications through which a lot of claims comes through. They also have uh, they have enabled applications. They have enabled websites. They have enabled work from home for their employees to the tune of around 9,000 employees. They can work from home. All of these figures are as per the annual reports what they published, and it is publicly available. They have very good risk management services, as I also mentioned earlier in the earlier slide. They have a predictive loss modeling framework, which reduces the risk when they select uh, the case for the premium and for providing the policies. They have a very diversified exposure. They have a reinsurance done, and they also have a zero instance of default in debt portfolio since they have started business since inception. So these are very good key differentiators when you compare this company with any other company which is listed. Let's see the financial performance. So financial performance, so they have a combined ratio. So this ratio is basically should be lesser the better. That's why this needs an improvement. So what it means is that the outflow compared to the incoming premiums is more. The kind of claims they are processing, they are more a bit compared to what they're getting as a premium. So it's a combined ratio. I think this is what it needs a bit of improvement, should be lesser than 100%. Return on average equity is good compared to, if you compare it to year on year, there is a improvement, there is a increase. And when you compare quarter to quarter from the last year, it's flat. Profit before tax has improved on both the year to year comparison and the quarter to quarter, and profit after tax has also gone up from and all of these figures are in billion rupees. So it has you can see the increase between, profit after tax is around 23.4% increased year on year, and profit before tax has increased to around 15.1% year on year. Quarter on quarter also, if you see, there is an increase of profit after tax is around 22.6%, and there is increase of 21.4% quarter to quarter for the profit before tax. So all of these numbers are reflecting good on the financial performance. The only thing is the combined ratio should improve. So they need some strategy around improving this combined ratio. Financial performance, if we see for the past years, you can see the sales growth. So over the 10 years, they have grown by 16% around. 5 years, 15% compounded, and 3 years is around 21% compounded. So that is a good growth in the sales. If you see the profit growth, that is also pretty decent. Very good numbers. 10 years it is around 25%, 5 years 24%, and last 3 years is around 36%. uh, and then the stock price CAGR is available only for 3 years and 1 year, because it got listed in 2012 only. So last 3 years it's around 23% stock price has increased, and around 1 year it is almost like it has not done much. So the valuation looks reasonable at this point of time. Return on equity is also good. Last 10 years average, if you see the return on equity, it is around 18%, 5 years 20%, and last 3 years is around 21%. Good figures. So let's see the pros and cons. The pros in is company is almost debt free. There is no very little debt. It has delivered a very good profit growth of 23.75 CAGR over last 5 years, and it is has been maintaining healthy dividend payout of around 17.22%. These are the pros. Cons are it is trading at 8.46 times the book value, which is slightly expensive. And then there is a earnings include, there's other income they have included 495.52 crore. That also just increases the earnings, but that is an exceptional item. It's another income, and promoter holding has slightly decreased over the last 3 years. So they have reduced, I think, around 4.04%. So these are the only things which I could figure out, which they have. There are some pros and cons associated with the stock. What are the growth opportunities? So general insurance industry, if you see, this is a highly underpenetrated. So if it is only 0.97% of GDP, whereas the global average is around 2.78%. And this is in spite of the industry which is growing at 16.7 at this is a CAGR, compounded annual growth rate since 2001. So there is a lot of scope of catching up. I think there is excellent growth opportunity in this sector. Private sector accounts for 48.2% of the market share, and ICICI Lombard is the market leader in that. And they have a market share of around 12.6% among private players which are listed or unlisted, and 7% in the industry, the overall non-life insurance industry, general insurance. They have this market share. There are significant growth of prospects given the country's favorable demographic, especially in the health insurance sector. There is a big growth which is due, and as the time goes by, this is going to do very well. The regulator IRDI also continues to introduce regulatory changes, and they are trying to enhance the market context. They are rolling out a different kind of a guidelines to so that there is a welfare for the customers. They are bringing in a lot of regulations, good practices, industry trends are being set, so that will really help going forward. This sector is going to get re-rated when foreign players continue to increase stakes in Indian companies, partner companies. There are regulatory changes which will happen, and then there is affordability also to buy insurance as the people become more aware and the product evolves over a period of time. This has potential to give multifold returns over next many years. So I think there is a lot of growth opportunities in general insurance sector, and ICICI Lombard being a market leader is definitely going to do well if they continue their market share, and if they continue to gain also the market share, they will really make their market cap will increase over a period of time, and they will grow. So what should be done? So if you have already invested into the stock, then probably you can hold it on to that. Do not sell it. Keep around 4 to 6% in your portfolio. The allocation should be around this percentage. Buy on major declines whenever there is a bad news or not so good results expected by the street and the stock falls, 10 to 15% or 5 to 10%. That point of time you can buy that, and then or you can also do a SIP for some time till you reach the your desired portfolio at allocation. Current market valuation looks reasonable. If the market declines from here at around 5 to 10% whenever it happens, that is the definitely a good time to accumulate this stock. It's going to be a long term play. It is not for traders. It is not for buying today and selling tomorrow. You need to stick to that and give it time so that the company grows with the opportunities which are being played out over the period of time. Thanks for watching the video. Uh, Please do like and subscribe so that whenever I create videos like this next time, you will get a notification. Thanks a lot.